Hey, Saretsky here. As always, Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. I want to touch off this week with really just frame this week's video up with some amusing comments coming out of the Bank of Canada's Deputy Governor, Tim Lane. So if you didn't see that, Tim Lane was out this past week calling the crypto space, quote, a speculative mania. So his comments obviously resonating across the financial landscape. Of course, no mention whatsoever of the Canadian housing market or potential bubble valuations there. In fact, I find it rather ironic that Tim Lane's comments come during the same week that you had massive movements in the crypto space. You had obviously Mastercard jumping into the game, expanding their platform to accept cryptocurrencies. You had Tesla, one of the largest companies in the S&P 500, investing just under 10% of their liquid assets into Bitcoin. And then you had the first ever approval of the Bitcoin ETF in Canada. So first ever ETF in Canada and in North America for that matter. So massive regulation, massive adoption in the Bitcoin and crypto space. And this guy is coming out and saying it's a speculative mania. But again, so Bitcoin being a speculative mania, housing totally fine. Nothing to see there. Don't worry about the valuations. There's no asset bubble. Continue on your merry way. I'm not going to sit here and pretend to be the Bitcoin or crypto expert. I'll certainly stay in my lane, and that's why I have people like Jeff Booth coming on my show at the end of the month, where we'll do more of a deep dive on the Bitcoin space. For those of you longtime viewers, you'll know that I am long Bitcoin. I've been long it for close to 2 years now, and I continue to be bullish for various reasons. Mostly, I think the price action speaks for itself. But we'll get into that because understanding really the monetary framework of where I'm coming from. So we have to understand here that we have a central bank which continues to, I think, just continue to miss the ball. It's getting borderline comical at this point. It's kind of like it's really almost kind of funny. You have the Bank of Canada again coming out and saying, okay, crypto's a speculative mania. Oh my gosh, don't touch that. But over the past several months, they continue to say nothing to see in housing. We're not worried about a speculative bubble. There's not much froth at all in the Canadian housing landscape. Yet again, in 2020, you had record sales volumes, record high prices. You've got, I'm telling you, as somebody as works on the sidelines day in and day out as a realtor, this reminds me of 2016. You have this immense froth, these immense bidding wars where the price appreciation is rocketing through the roof, and it hasn't quite yet shown up in the MLS benchmark prices because it's a lagging indicator. Those benchmarks can lag by up to 6 months, and so you're going to see 15-20% plus price appreciation in those benchmarks. And once the media gets a hold of that, they're going to run with it. And so the runway is higher for Canadian housing, and yet the Bank of Canada says, again, nothing to see here. The fundamentals are strong. So, in fact, I'm going to clip right now to a clip because I think Mr. Pierre Poilievre probably summarizes the recent things, better than I can ever summarize them. So let's clip that video right here.
And then you move to real estate, where prices are up $65,000 this year. Can you imagine, Madam Chair, that in a year where our economy has lost over $100 billion of economic output, where hundreds of thousands of people have lost their paychecks and been forced into their homes, that somehow we found all this money to buy real estate? In fact, in the year from the beginning of 2019 to mid-2020, The inflation of our assets in this country has been worth more than our entire economy. $2.7 trillion of asset inflation in an economy worth just over $2 trillion. That would be like every year making more money from the appreciation of your house than from the salary you take home from work. It would be nice if it could happen forever, if we could float simply on a bubble up to prosperity. But we know that in the end, our assets are only worth what we can afford to pay for them.
So again, perhaps we can, Pierre, continue to float on this bubble of economic prosperity. But make no mistake, the housing market, as I've said repeatedly in these past videos, and it's the same for the crypto space, and it's the same for the stock market, and pretty much every other asset you can look at, everything is rising. A rising tide lifts all boats, and it's backed on a sea of liquidity that is being printed. So the Bank of Canada and their central bank allies are attempting to print prosperity. And that is why you have rising valuations that continue to make no sense. I mean, again, all we have to do, look at the latest figures on population growth in Canada. We admitted a third of what we normally do. We had the lowest population growth since the 1990s. We had the lowest population growth since the 1990s in Canada, and yet you have this rampant price appreciation. So not only is the labor market weak, not only is the population growth weak. Again, keep in mind that these were the two factors. When you go back into those manias of 2016 and 2017, everybody was talking, well, you know, it's Canada, everybody wants to live here, all these people are coming overseas, look at the population growth, the numbers are skyrocketing up, we're not building enough condos. That was the narrative. Well, what is the narrative in 2020? The narrative has been, we don't know, it's just going up, it's Canadian real estate, because nobody actually understands that basically the Bank of Canada is essentially just printing loonies, and your houses are going up not because they're appreciating, becoming more valuable, because the currency is actually just depreciating against those assets. And it's this, again, it's the same thing for Bitcoin. It has become, quote unquote, a mania because the whole thing was birthed out of the fact that the central banks have lost control of the financial system and of the fiat currency, that you don't have sound money. And so these principles, this Bitcoin basically emerged out of that, emerged out of the financial crisis. And so that's something that I continue to find fascinating. Again, I find that the Bank of Canada's comments continue to be amusing. It's, again, almost becoming a comedy show at this point. And while I will agree that I think that asset valuations, no question, are absolutely through the roof. I think that you have massive bubbles across most sectors of financial markets. In fact, across almost all financial sectors. But you're left almost no choice. It is to sit there in the obviously devaluing currency, or you have to play along and have enough cash for when those dips do come, you continue to buy the dips. And so those are kind of my comments this past week. Really just enjoying the momentum here in the Bitcoin trade, in the Canadian housing trade. Again, I really can't emphasize enough what is happening. I mean, just this past week here in Vancouver, you know, every single house is going multiple offers, whereas in one listed in the 2 millions, maybe, you know, gets 20. It had 20 offers on it. It sold for $500,000 over asking, blew through any of my valuations that I had. And so that's what happens in these housing markets. You can get massive shoot ups in price appreciation, because what happens is when you get into a bidding war where you get 20 offers, I mean, to be the guy that has to beat out 20 other people, you're going to pay a hefty premium, and that drives the price up, and that then sets the next comparable house in the neighborhood. So when the neighbor goes to sell, he looks at that sale and says, hey, that guy just got 20 offers and sold for X. That's the comp. I'm going to list at what he got. And so that's like the new expectation, and then that pushes the prices up and up and up. And so that's similar to what we saw in 2016. You had 30-40% price growth in a year, And then when the music finally stopped, in the, for example, in the single family market in 2016, it was kind of a 2 to 3 year slow slope down where prices slowly leached lower. And so this is the dynamics. And again, I find it very interesting that, I was in a conversation with CMHC on Twitter. So, they're whoever's running their corporate account starts tweeting me and John Pasalis, my buddy John in Toronto, saying that, John put up this report. He said, well, CMHC, per your report here, the latest report as of December 2020, you came out and said that there's no signs of overheating, there's no signs of overvaluation in the Toronto housing market. And John says, well, suburban single-family house prices are up 30% year over year and growing. I mean, you're seeing 20, 30, 40, 50 offers on a house. Please tell me that something must be going on here. That must be signs of froth and overvaluation. And CMHC responds, no, based on our analysis, the underlying fundamentals are supportive, economic fundamentals are supportive of Toronto valuations. And I'm kind of thinking, like, hold on a minute. As per the Stats Canada data, you had record unemployment last year. So you had record unemployment and you had the lowest population growth, which are pretty much the two largest economic fundamental drivers of housing valuation, hitting rock bottom lows. So, I mean, you got the highest unemployment rate that we've seen in several decades. I'm not sure what fundamentals you're looking at. So I don't understand what these government agencies are doing. And I think to really summarize this week's video, you have a scenario where people are losing confidence, they're losing faith, they're losing confidence in our financial, in our institutions. So people are losing confidence in the Bank of Canada, that is an institution. People are losing confidence in institutions like CMHC. People read these reports and go, hold on a minute, that doesn't make any sense. And so I really believe that Bitcoin, whether you are bullish on that asset or not, is irrelevant. Bitcoin is essentially, it essentially symbolizes the loss of faith and trust in your institutions. So you're going to this decentralized system. Again, whether the system ends up prevailing or whether it goes to zero, if that's your mindset, people are voting with their investments, and they're voting into this decentralized system because there's a loss of faith in the institutions. And this is something that Neil Howe has talked about in his book, The Fourth Turning, is that you go through these cycles and these stages, and that we're arguably entering into that fourth turning where, again, people lose faith and confidence in institutions, and you eventually have to rebuild. Things basically burn, crash, and you rebuild those institutions from the ground up, and then you go back into basically what's essentially called like a rebirth of the institution. So I really think that the recent action over the past 12 months indicates that, and I don't see any stopping that. I think that barring some sort of hiccup in the financial system here, some sort of financial accident, asset prices or asset valuations across the landscape are going to continue to push higher. You might have a couple pullbacks here and there, but the pace of the printing, it cannot and it will not be stopped. And the Bank of Canada does not care because they continue to dismiss any signs of overvaluation or froth or excess or bubbles. And that will continue until something breaks. So hope that video helped. Hope brought you some value, entertainment. As always, hit thumbs up, subscribe. That's why we have this community here. Continue to push forward on financial education. We'll have more and more guests. As I mentioned, Jeff Booth coming on at the end of February, and we have a lot more guests lined up in the coming months ahead. We're going to do one long form video per month. So see you next week.